Welcome to another episode of the Insilico Terminal podcast. Today we have a bit of a different guest with us since we have mostly had traders on so far and interviewed them. Today we have the founder of an exchange. And I just want to make a little disclaimer at the beginning that this is not an official announcement for integration or anything or collaboration or endorsement or whatever. It's just, I think, it's a good opportunity to also switch up the guest list a bit and not only talk to traders but also to people that are building stuff in crypto and in the trading world around us. And I'm also not getting, this is not a paid shield. I'm not paid. I do have extended points. I'm going to admit that, so I might be a little bit biased, but we're still just going to have a good conversation here, I think. Yeah, so why don't you tell us a bit about who you are, about yourself, about what you're building? Why don't we just start with that?
Yeah, sure. Hi, Sokya, and thanks a lot for having me. Right, and it's great to hear that
Of
you're
course.
active on Extended. Um, yeah. So as for the intro, basically, my name is Ruslan. I'm the founder of Extended. With Extended, we have a very simple and clear vision. Right, we want to build a
Hmm.
fully fledged self-custody exchange with a unified margin across perps, spot, integrated lending market, and that's basically our midterm goals towards which we are working. Right.
Hmm. And I'm actually curious, what made you start Extended? What is like your goal with it?
Yeah.
Why are you passionate about the project?
Sure. Look, we've started Extended in early 2023, right? And
Hmm.
basically back then, me as well as most of the team members were at Revolut, right, where I was the head of crypto operations. And back then, in late 2022, right, we chatted to a lot of partners in the space regarding various potential collaborations, just exploring opportunities. And we also chatted to FTX back then, and
Hmm.
essentially it was quite weird because we had multiple calls with them. They were super positive, right? Super
Hmm.
bullish on everything they are doing, and then all of a sudden they collapse, right? Which was completely
Yeah.
unexpected. And we also got a bit of the weird feeling, right, when you just know the people, right? You talk to them, and then
Hmm.
the week after, right, everything completely changes. And we
Yeah.
essentially, like, we had a very simple idea back then that basically you can build a very similar product, right? However, all the user funds will be self-custodied. Uh, the operator of the exchange would not have access to the user funds, wouldn't be able to impact the trading logic. All
Hmm.
the all the trading logic would be validated on chain, and essentially, I just got super interested in that, right? And they saw a massive opportunity because back then, effectively, there was no hyperliquid, right? The only
Hmm.
perp DEX was the only perp DEXs were the YDX and GMX, and already back then it was clear that the user experience there is suboptimal, right? A lot of
Yeah.
things can be done better. The product portfolio can be expanded, and yeah, essentially, we started building towards that idea, right? And that's basically how we came up with the idea of Extended, right? As
Hmm.
for why it makes me passionate, look, one, I think crypto overall is a super fast moving space, right,
Hmm.
where a lot of the things change on the fly, a lot of opportunities exist. That also presents a challenge to the team, right? And
Hmm.
it's super interesting to work on solving that challenge. The other thing is that the feedback loop in crypto is insanely quick, right? So you release a feature, you basically
Hmm.
understand whether it works or not immediately, essentially, right? Because if you have active users of the platform, you basically hear the feedback the same day, right? You get
Yeah.
concerns about your product, both as well as the positive things, right? Like effectively almost at the same time as you release new things, and this is great, to be honest, right? Because it allows you to iterate on the product super fast, and if you are receptive to the feedback, basically your community helps you build that product, right? which is
Hmm.
which is obviously great. honestly, I don't think there is any other industry like that where the users and the builders can be so close together, right? Obviously,
Mm-hmm.
this like builders need to want that, right? They need to be open to the community, they need to be talking to them, etc., etc. And this is what we are trying to do as much as we can, and this
Yeah.
helps us improve the product a lot, right? As well as like it's when you actually talk to the people who use your product, it gives you additional motivation, right? It gives you
Mm-hmm.
additional motivation and drive to do better, right? To try to effectively become the best product in the space, right? And the space is super competitive, right? Perp is probably one of the most competitive markets overall,
Mm-hmm.
and that's just a great challenge to take on, right? I don't think I can think of any other topic or business which would be as exciting or as fast moving, right?
Mm-hmm.
Or effectively as interesting to build in as versus what we're doing now.
Yeah, yeah, yeah. Okay, I can see that. I definitely agree about that. Obviously, I think crypto is probably the most interesting place to be, which is the reason why I'm here. Why probably most of the listeners are here. I'm wondering. I don't know how much you
100%.
can say about that, but since you said like that you and many parts of the team were like at Revolut before, is there a reason why you decided to like is there still a connection, or is there a reason why you decided to like split off and like do stuff by yourself? Like why is it not called Revolut Dex, for example? Why did you like make it its own product?
I mean, we are an independent team, right? So essentially, our connection to Revolut is as follows. Basically, most of extended employees and the team are former employees at Revolut. That's one.
Mm-hmm.
Secondly, we have quite a lot of existing, both existing and former C-level employees of Revolut being investors in extended, right?
Mm-hmm.
As well as we are talking to the Revolut team on various topics, right? But that's basically the connection, right? So extended is a separate team, right?
Mm-hmm.
That's why we're not called the Revolut Dex.
I see. Yeah, I was just wondering if since you did like the crypto um operations at Revolut, why maybe they, I don't know if I can like speak about that, but maybe why they didn't decide to like do something like that themselves.
Look, probably the best way to answer that is that they're they're super ambitious, right? And
Mm-hmm.
their roadmap back, I'm sure back when I was there as well as now, right, is quite aggressive, and they want to do a lot of things.
Mm-hmm.
But by definition, they will always be moving slightly slower than essentially the rest of the market, and especially than DeFi,
Yeah.
just because one, it's a huge company, right? And
Mm-hmm.
secondly, it's like they are a regulated bank, right, which has its
Mm-hmm.
own consequences on the way the things move, right? And to me, it was clear basically back then that both the base at which you can move, right, as
Mm-hmm.
well as essentially the opportunities which you can explore are much bigger and wider versus doing it at Revolut directly, right?
I see. I see. Yeah, that actually makes a lot of sense. Um, I'm also not trying to be like too critical or anything about that. I'm actually I'm a huge, I'm like a daily user of Revolut. I like use it for my every like payments and whatever. I'm not really like buying or selling assets on there or stuff, but for payments and everything, it's a really nice product. So I
No,
can
look, it's an amazing product.
attest to
It's an
that.
amazing company, right? Which is super bullish on crypto, super active in crypto, right? To the extent they
Hmm.
can be. They have a very ambitious roadmap, right? And that, like, I'm quite confident they will execute on that. It will take some time, but they
Yeah.
will, right? And yeah.
How big is the extended team? How many team members do you have?
Look, we're super small, right? So we have 10 people in the team.
Mm-hmm.
Essentially, we have four backend engineers, three front-end engineers, one
Mm-hmm.
person on the product slash all the operations, including support, and one person on the growth and go-to-market. And then myself, I'm basically trying to do everything, right?
Yeah.
Growth,
Yeah.
operations, product, whatever requires my attention, I'm doing that. But we
Mm-hmm.
are a relatively small team, right? And like we're thinking about expanding it, but like there are no specific plans because, and I think you understand me. It's much easier to move with the smaller team, right?
Mm-hmm.
Like you can do things faster, you can take decisions faster, you can iterate quicker, right? So there is a
Mm-hmm.
lot of benefit of remaining a small team, right? As well
Yeah.
as we've obviously seen a lot of examples when small teams can build huge products, right?
Mm-hmm. No, I definitely agree. I mean, we're also not like the biggest team, and I think Hyperliquid is probably like the greatest recent example. I think they're also only having like 10 people or whatever on the core team. So
100%.
yeah, it really doesn't take that many to build something great. And I also like I've talked a lot about this with Dennis recently. I think if you have like a small team where everyone is like really very like close to each other and dedicated and all of that stuff, it like makes communication and everything a lot easier. And as like team scale, you need to like implement a lot more of I guess like these process oriented things just so that everyone is like on the same page and all of that stuff. So I definitely see the advantages of having a smaller team. And I mean 10 people is also not like
Yes,
that little.
there is also an indirect benefit is if you have a big team, right, you are by
Hmm.
definition working on multiple small products in parallel, right?
Yeah.
And effectively, people who are responsible for those internal projects or internal products, they can sometimes, like, effectively, there can be a conflict of interest between a couple of smaller products within the same company, right?
Hmm.
Just for the purpose of releasing faster, right, or achieving own
Hmm.
targets. Whereas in the small team, basically everyone works on a couple of prioritized features, right, and all the interests are aligned, and hence you don't really like, require complex processes, right? Everything can be
Yeah.
managed quite simply and remain efficient, essentially.
Hmm. So, what would you say is like the main distinguishing parts of extended? I think right now is actually a really good time to have this conversation because, or maybe I don't know, maybe the meta died down already after the latest nuke. But before that, like last month, we had the perp dex meta where every new thing
Mhm.
like popped up. We had like obviously hyperliquid in the last year, which was really successful, and then lighter got a lot more attention and there's like many other purse sexes as well, and extended is also part of that category. Like, what distinguishes it from the others, and how do you plan to like take market share and make it succeed in face of the competition?
Yeah, sure. Look, we believe that in the long run, the only way to get sustainable product usage is product differentiation, right? So your product has to be
Hmm.
unique in a certain way, and it has to cater to the needs of the users and solve some problems, right? Essentially, our stance on that is that product wise, the key differentiator is everything around the logic of the unified margin, right? And basically, we see it as a multi step process for us. So this
Hmm.
month we are planning to release the tokenization of the vault shares, which in the simple words would allow you to use the funds locked in the vault as the collateral in the
Hmm.
exchange. Right? That will be the step one. Then until the end of the year, we are planning to release the cross asset collateral margin, meaning that users will be able to post non-stable coin assets as the collateral, such as I don't know
Hmm.
WBTC, LBTC, Rep Stake, Thief, USD, and use that as the collateral to trade USDC settled perps. That also implies
Mm-hmm.
that basically all the USDC deposits into the exchange will become yield bearing, right? Just because if
Mm-hmm.
there is a person who deposited non-stable coin asset as the collateral and then he has a negative unrealized P&L, he's basically borrowing funds and paying interest to all the
Yeah.
USDC depositors. That's the plan until the end of the year, right? Then in Q1, we are planning to release the spot markets, right?
Mm-hmm.
And once we have the spot markets, basically we'll have unified margin across spot, perps, and integrated lending market. Longer
Mm-hmm.
term, we have a plan to essentially both decentralize the operator as well as build our own EVM compatible chain on top of Starknet.
Okay.
The key differentiator of that chain will also essentially be centered around the unified margin logic,
Mm-hmm.
with margin of the exchange being available on our network for the users. So effectively, if you as a
Mm-hmm.
user, let's say, posted one BTC, one WBTC as the collateral on extended exchange, right? You started trading perps. Let's say you have a positive unrealized P&L, your total equity is, I don't know, like 150K, for example, right? That
Mm-hmm.
equity will be tokenized as an ERC20 token, which will be exposed to our EVM compatible chain, right? So as a user, you will basically have the same margin available both on the exchange and on the
Mm-hmm.
EVM compatible network, which would effectively again reinforce the efficiency of the margin usage, right?
I
And
see.
that's our longer term idea. And then validators of the EVM compatible network will also be basically running the operator of the exchange, right?
Mm-hmm.
Meaning that our matching, liquidation, and all the currently centralized logic will be distributed across the validators of the EVM compatible network.
Mm-hmm. Does that mean it would be something like a layer 3, maybe? I think is Starknet a layer 2 of Ethereum? It is, right?
I mean, Starknet is a layer two, right?
Mm-hmm.
Here, in terms of our chain, like I wouldn't position it as layer two or layer three, right? It would rather like basically it would be something closer to our own L1, right? Because we
Mm-hmm.
would also accept deposits directly from the other chains. But essentially, I think the simple way to think about it is if you draw an analogy with Hyperliquid, right? They have Hypercore and Hyper EVM. So
Mm-hmm.
our Hypercore will remain Starknet, right? Where effectively
Mm-hmm.
all the user funds will be secured, and our version of Hyper EVM will be like essentially our own EVM compatible network with margin of the exchange, right, being available there for the usage.
Mm-hmm. I see, I see, I see. And can you speak a bit more about why you chose Starknet? Because I think that is not really the most obvious choice, I guess. It's not really the most popular chain, or I personally don't know of anything else that is going on that chain, to be honest. So
Mhm.
why did you go with that?
Yeah, sure. Look, it's quite a frequent question, and the answer to that is pretty straightforward, right? So effectively from the get-go, we did not want to control the settlement layer, right? So we
Mm-hmm.
wanted the user funds to be stored and secured by an independent public chain, right? And we wanted that chain to be part of the broader Ethereum ecosystem, right?
Mm-hmm.
And if you have those two requirements, right, basically there is no other choice besides Starknet, which also fulfills like the requirements on the throughput that we have as an
Mm-hmm.
exchange, right? So, for example, I think we're settling somewhere in between 500 to a million, 500,000 to a million transactions per day, right,
Mm-hmm.
on chain, and essentially Starknet is probably the only chain that can handle that throughput at the required cost, right?
Mm-hmm.
As well as like besides that, I think security-wise, Starknet is one of the best choices because they are the only CK-enabled chain with the decentralized sequencer, right?
Mm-hmm.
However, at the same time, what's important to note is that our users, they don't really need to interact with Starknet, right? Yes, their
Yeah.
funds are secured by Starknet, right? However, we support effectively all the EVM wallets, right? We
Mm-hmm.
support deposits and withdrawals from and to major EVM chains. So essentially, as a user, you don't need to interact with Starknet if you don't want to.
Mm-hmm.
Obviously, we also support like Argent as the main Starknet wallet, right?
Mm-hmm.
But for the rest of the EVM users, they effectively can use us as any other EVM application, right?
Yeah. Yeah, I think that's really good, and that's very very useful because I've never really. I think I've tried to play around with Starknet before, maybe before they did their airdrop, but I think the user experience was so annoying to me that I just like gave up at some point. So it's like very good that you
Mhm.
can just use the normal wallets and normal EVM experience. I wanted to ask why were like the two requirements you mentioned at the beginning of not controlling the settlement layer and being close to the Ethereum ecosystem. Why is that like important to you?
Look, because effectively we want to build a trustless product where
Hmm.
users don't need to rely on the operator of the exchange, basically on us, right, for the security of their own funds. And I think if you have that requirement in mind, that's effectively the best choice to proceed with the public chain, which is
Hmm.
secure and decentral and sufficiently decentralized, right? Um, yeah. So basically, that's the core reason.
Okay, that makes sense. I would like to ask more about the multi-asset margin system,
Mhm.
because, as you said, that is like one of your key differentiating features. If you could explain a bit more on how that will work and be architectured, because I think it's quite a complex thing to do, especially on chain. You have to do like a lot of hedging and make sure everything is
Mhm.
secure. If you could
Yes.
speak a bit more on that.
So, yeah, sure. Like, I think we can start basically from the basics, right? From the basics of the on chain logic that we have. So, essentially, every user of Extended has his own, let's say, vault, right?
Hmm.
In our smart contract, and every vault has its own positions, right? And
Hmm.
has its own equity, right? Effectively, the two main parameters of every user's account, right, is the equity of the account and the maintenance margin requirement of the account. As long as equity
Yeah.
remains above maintenance margin, the account is healthy. At the point if equity drops below the maintenance margin requirement, the account is subject to liquidation. If equity drops below zero, the account becomes subject to ADL, right?
Hmm.
And by the way, we cannot liquidate or ADL users in case those two requirements are not met on chain, right?
Hmm.
Now, currently, equity of the account is basically the USDC collateral plus the value of the synthetic positions, so
Hmm.
perpetual positions that the user has, right? Maintenance margin is just effectively the margin requirement of the position, right, multiplied by position size multiplied by market price, right?
Hmm.
When we add spot assets, right, as the collateral, that will basically mean that those spot assets will contribute to the equity of the account, right?
Yeah.
And essentially, as long as you have a price of the spot asset, and you can also apply a discount factor to a certain asset, right? Basically,
Hmm.
nothing really changes from the on-chain logic, right? So the pure on-chain logic remains relatively simple, right?
Hmm.
But you add essentially one more parameter, which is the size of the non-stable coin asset as posted as the collateral multiplied by its index price multiplied by the discount factor if we are to apply it, right?
Hmm.
So the on-chain logic remains relatively straightforward and it doesn't really change a lot. The core principles remain the same, right? Now, the complexity with the cross-asset collateral will be the liquidation of those spot assets.
Yeah.
Because imagine you as a user, you have deposited, let's say again, like one WBTC, right? And let's say that we apply, I don't know, like a 5% discount factor to BTC. So one BTC contributes 95% of its value to the equity of the account. Now, if you become subject to liquidation, right, as the first step of the liquidation process, we would need to sell off. Like we'll first try to close synthetic positions. If that doesn't work, we need to sell off your spot asset, right? In the beginning, until we have our own order book based spot, right, we'll be executing liquidations of spot assets through the RFQ system, where effectively all the market makers who are currently integrating the extended will have an option to pick up the liquidations of the spot assets. Practically, it will work relatively simply, right? Like, let's say you know that you need to liquidate one BTC, and the worst price at which you can liquidate it, right, is, I don't know, like 100,000, right? Effectively, you are submitting a request for quote, RFQ, right, to all the market makers who are active on the exchange, right? And then in response, the market makers give you the price at which they are ready to take on that asset, right? And you basically pick the best price which they offer, right, and execute the trade through them. Essentially, the trade in that example would be just the fact that we transfer them one WBTC and they transfer us USDC collateral, right, which is basically credited to the position of the liquidated user, right? Once we have the spot-based order books, right, all the liquidations will go through them. But until then, all the spot liquidations will go through the RFQ system.
I see. And why would the synthetic per position, for example, I think you mentioned that earlier, why would that not be able to be liquidated? Like
No, it can be liquidated, right? Essentially, if you like in the unified margin logic, right, you essentially have various types of risk exposure, right? And you choose which ones to close first, right? Essentially, in the example which we had, where the user has one WBTC as the collateral, and let's say five open synthetic positions, we'll start liquidating synthetic positions, right? But imagine that as the result of the liquidation of synthetic positions, the account equity is, for example, below zero, right?
Yeah.
Then we would need to sell off the spot asset because we know that the spot asset goes with the 5% discount.
Yeah.
Right? And we know that if we sell the spot asset, I don't know, at 1% discount, right, the user's equity will still go up because we actually apply the 5% discount, right? So liquidating spot in that example, right, would essentially bring account back to the healthy state.
I see. Yeah, that makes sense. I get it. What are the challenges that you encounter during this process? Like it's not really live yet. So what is like challenging you in that process, or why is like no one else building something like this? Do you have any ideas about that?
What's challenging? It's a good question, right? Basically I was able to describe the entire logic, I think, in 5 or 7 minutes, right? So the logic itself is not that complex, right?
Yeah.
And I think, like, honestly, I think the key challenge was to design it in a way that can be executed in steps, right? As well as simplify the design so that it can be done quickly, right? So, two specific examples, right? One is if we didn't think of the RFQs, if we did not think of the RFQ system for the liquidation of the spot assets, we would need to build first the order book based spot, right? Which is not that complex in itself, right? However,
Yeah.
bootstrapping liquidity for spot is quite complex, and much more complex
Yeah.
than
Yeah.
for perps, because you don't have
Mm-hmm.
leverage, right? So that was the first challenge, which we essentially solved with the RFQ based system, right? Now, the second challenge is, as I've explained earlier, imagine if you have, let's say, 1 WBTC and you have negative unrealized PNL in USDC, you need to pay an interest rate, right?
Mm-hmm.
So the question is, how do you actually define that interest rate?
Mm-hmm.
And you have multiple approaches, right? You can build a lending market like Aave, right? Or you can choose Morpho's model, right? Where essentially interest rate curve can also shift, right, upwards and
Mm-hmm.
downwards. So, and those are relatively, like, the Morpho's model is a relatively complex product, right? And
Mm-hmm.
you also need to make sure, because, like, I will probably not go into the super details of that, but
Yeah.
imagine your negative unrealized PNL is not a fixed number, right?
Mm-hmm.
So unlike in any other other any lending markets, the amount which you borrow fluctuates with the change of the mark price, right?
Mm-hmm.
So there is quite a lot of complexities in how you calculate the accrued interest payment, because let's say you have 10 synthetic positions, right? Altogether, they have the negative unrealized P&L of 11,000, right? A
Mm-hmm.
second later, all the mark prices update. Your negative unrealized P&L is, I don't know, minus 11,152, right?
Yeah.
And you need to find a way to be accruing the interest payment correctly, taking into account the changes in the mark price, right?
Mm-hmm.
As well as the value of your spot asset also defines how much you actually borrow, right? So
Mm-hmm.
basically, the entire interest accrual, and interest payment logic is quite complex, right?
Mm-hmm.
Then, and we just found ways to make it simpler and to make it work, right? Then
Yeah.
the third example would be is, imagine you have a spot asset as the collateral which you cannot liquidate,
Mm-hmm.
right? You just, no one wants to buy it, right? You need to have an ADL of borrows and ADL of spot, right?
Mm-hmm.
And it all has to fulfill the on-chain requirements of us remaining a trustless exchange, in the sense
Mm-hmm.
that we cannot liquidate or ADL users without those transactions being valid on chain, right?
Yeah.
So there are quite a lot of complexities on how you can design that system, right? I wouldn't say that they are, I mean, they're obviously solvable because we've solved them, right?
Mm-hmm.
But they require quite a lot of really thorough system thinking, right? Because perps in itself is already a relatively complex system, right?
Mm-hmm.
Once you start adding non-stable coin assets as the collateral, right, with all the liquidation logic, interest payment accruing logic, ADL, that quickly becomes a very complex system, right? And you
Mm-hmm.
just need to make sure that it will all work even in the worst case scenario, so that there is
Yeah.
never bad debt in the system. That's one. And secondly, you need to make sure that it all works in terms of the, let's say, throughput and settlement requirements. Because
Mm-hmm.
imagine, like, we could do interest payments real time, but then that means that every millisecond we would need to accrue an interest payment, right?
Mm-hmm.
That would basically 10x the amount of transactions that we need to settle.
Mm-hmm.
And basically, there are a lot of nuances how it's being built, right? But we're quite confident in the design that we have, and we believe we
Yeah.
can deliver it relatively quickly. Now, in terms of the question on why others don't do it, right? My personal opinion, right, is that in the end state, all the perp taxes should and probably will support the cross asset collateral margin logic,
Yeah.
right?
Mm-hmm.
Now, practically, why they don't do it is, I guess, one depends on tier architecture, because,
Mm-hmm.
like, there is a huge benefit of us building on top of Starknet, is that essentially all the, like, Starknet is a general purpose chain, right? So we can
Yeah.
build whatever business logic we want in Cairo, right?
Mm-hmm.
Basically, in general language, right? For other perp dexes who are, for example, running their own, I don't know, ZK logic, right? Or they would need to effectively build it at a much lower level,
Mm-hmm.
right? Of all the ZK circuits, etc., etc., which is a much bigger effort, right? So I guess the short answer is that I believe everyone will get there at some point, right?
Mm-hmm.
But I think that probably will be one of the first ones to get there, or even the first one.
I see. Yeah, that sounds good. I mean, I hope you do for your sake, or it's just in general would be a good product to have in crypto.
I
Do you
agree.
think making it because it's like you're doing it in a trustless manner that you're more vulnerable to attacks from people that like try to abuse the system as well, because you can't just like roll back stuff or like centralized exchanges to it in the
Yeah.
background and make users hold that way.
Look, and by the way, sorry if my previous answer was too long or too boring, right? I think I
No, no,
went
I
into
think it
quite
was
a lot of
very
technical details.
no, no. It definitely helped me to understand it better. I don't think it's bad to have a bit more of a technical understanding. This is a podcast after all, so we have time.
Yeah. Look, as for the question whether it makes us more vulnerable, look, I think if it's built correctly, it makes us more resilient,
Mm-hmm.
right? And I will give you a couple of examples, right? So even now, for example, for all the triggers of liquidations, we're not relying on extended order book prices. We're relying on the external mark price, right?
Mm-hmm.
So essentially, you cannot, like, even if you manipulate extended order books, that would not have any downstream impact on the liquidation logic. And the same would apply to the cross asset collateral margin, right? So
Mm-hmm.
essentially, in order to manipulate, for example, liquidations on extended, you would have to change the price of the asset externally, which obviously requires
Mm-hmm.
much more capital and much more effort than doing it on one exchange, right? That's
Yeah.
one. Secondly, is let's imagine the worst case, right? Let's imagine that there is a transaction that extended cannot settle on chain because
Mm-hmm.
its on chain logic doesn't accept it, right? And we cannot do anything with that. We cannot roll back the state or whatever, right?
Mm-hmm.
That basically means that the state of the exchange in terms of collateral balances, in terms of equities, et cetera, is just frozen at some point in time, right?
Mm-hmm.
And it doesn't move ahead. Yes, that's very bad for us as the exchanger, as the operator of the exchange, right? But at the same time, all the user funds remain intact at the state at which the exchange was effectively frozen, right?
Mm-hmm.
And basically, users can access those funds without relying on us as the operator of the exchange.
Mm-hmm.
That's the second point, right? And the third point is essentially assuming that all the on-chain validations are designed correctly, right? Any fraudulent or invalid transaction just simply would not be accepted because it wouldn't
Mm-hmm.
pass all the on-chain validations. If it passes the on-chain validations, then it means that the transaction has been done in accordance to the rules of the on-chain logic, right?
Mm-hmm.
And hence it's not fraudulent. Right? So that's the way we think about it. So in the nutshell, we think it makes us more resilient and the user
Yeah,
funds being more secure.
I see. That makes sense. Yeah. While we are on the topic of risks, I think it's could be a good chance to talk about what happened, I guess, last Friday with like the
Mhm.
huge event that basically affected the whole market and then wiped out a ton of leverage and everything across
Mhm.
almost every single exchange. To be honest, I'm not too aware. I think you have had some issues with that
Mhm.
from
Yes.
some stuff I saw. I didn't really look into it that much, but I guess almost every exchange probably had like some form of issues at that moment. So maybe you could expand a bit on what went down at Extended and how you dealt with it and what happened basically.
Yeah, sure. Look, I think we definitely should have done better, and we actually could
Mm-hmm.
have done better, right? So essentially, Extended went down for an hour right
Mm-hmm.
after the crash, right? And it wasn't related to the load that exchange experienced. So we went through the essentially the crash itself, and we went through the highest load quite well, right?
Mm-hmm.
But then we experienced a bug in the logic of partial liquidations, right?
Mm-hmm.
Where basically partial liquidations were rejected on chain due to our on chain logic and on chain restrictions. And we had to update that logic on the fly in order to restart the exchange,
Mm,
right? So we had to
I
update the
see.
logic of the centralized part, right?
Yeah.
Now, that specific bug could have happened essentially at any point in time.
Mm-hmm.
However, during the effectively, it was related to two things, right? It was related one to how we, because the on-chain logic is simple. Basically tells that every liquidation trade needs to improve the health of the account, right?
Mm-hmm.
And the bug was related to the fact that if you have a partial execution of liquidation trade against the empty order books, which effectively happened during the crash, where a lot of market makers just pulled the liquidity out, we
Mm-hmm.
could not settle a couple of trades. And that bug could have happened at any point in time,
I
right?
see.
The good thing, it was easy to fix, but obviously during the crash, right, we had the market crash, we had like 6,000, I think, liquidation trades,
Yeah.
and the chance of facing that specific bug was just much higher, right? And then the
Mm.
chance materialized, right? That's basically what happened. We were able to fix it relatively quickly, restart the exchange in an hour.
Mm-hmm.
Obviously, there were users who were impacted by our downtime, and
Mm-hmm.
basically our policy is super simple, right? Like we're essentially reimbursing all the direct losses, right,
Mm-hmm.
related to the downtime of the exchange itself.
I see. Do you have like an insurance fund or something or anything like that, or how do you go about that stuff?
Yeah, look, for now, we've just compensated the funds from basically the funds of the exchange, right?
Mm-hmm.
Because the vault on the extended operates as the insurance fund, right? That obviously we
Yeah.
do not want to impact the vault depositors because of our own mistake.
Mm-hmm.
But the other thing that like basically a good learning, right, of the downtime and of all the compensations that have already paid and will be paying, is that we also need to start building up the insurance fund, right? And we are
Mm-hmm.
yet defining essentially the, let's say, revenue stream, right, which
Yeah.
will be donating funds to that insurance fund.
Mm-hmm. That makes sense. Yeah. Um, I guess I don't know if it makes sense to talk about a token or anything like that already. Is there? I mean, I guess you will have a token eventually. Do you have any um
Mhm.
like how
Yeah,
how are
look,
you gonna work with the tokenomics and stuff like that? Or do you have that planned out yet? Is that like public info or anything like that? Or
Yeah, look, it's part of it is public, right? But I think at this stage I will just share what I can, right?
mm-hmm.
Essentially, the TGE is planned for H1 next year, right? That's
Mm-hmm.
one. And then essentially, once we decentralize the exchange and effectively the exchange operator becomes distributed, right? Um, the revenues of the exchange will effectively go to the validators, right, of the operator of the exchange as well as of the EVM compatible
Mm-hmm.
network. Right? So the tokenomics is pretty straightforward here. The
I see.
revenues,
So
the
it's
way they
basically
will
like
go, right? they can go both through the buybacks, right, or
Yeah.
through other mechanics that is yet to be decided on, right? But the
Hmm.
principle will remain very simple, right?
So
That
it's
value
basically
goes
like
to the token holders, basically.
yeah. Okay. 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 Um, I was also wondering why, because one thing that I like about your product is that it feels very organic to me, or very non-shielded and stuff like that. Like you don't really pay people for advertising or anything, or at least that's how it feels
Hmm.
to me. Um, and also
We
like
don't.
you, apart from the point system, you don't really have any incentives like that other exchanges maybe use. Like you don't have zero fees or anything like that, I think.
Hmm.
So like why did you choose to go with that approach instead of giving out more incentives, or like paying market makers, users, or
Hmm.
KOLs or anything like that to promote the product and grow that way?
I mean, the short answer, right, is that the business has to be sustainable, right? Without the
Hmm.
business being sustainable, right, you cannot really grow in the long run, right? As well as you cannot support a healthy token economics, right?
Hmm.
And that's one, right? Obviously, like there will be a lot of counter arguments that with zero fees for takers, right, you can still earn money on the flow, right,
Hmm.
which I would say is partially true, right? However, in my opinion, that works much better for the retail apps, where essentially the users don't see the order book, right? They just get the price at which they execute the trade, right?
Hmm.
And effectively, the fee is built into the spread, right? So I think, like, if we have an example of Robinhood, right? Essentially, I think in their public documentation, they are saying that there is an 80 pips spread, right,
Yeah.
which is built into every trade, right? When you run an order book based exchange, this is not something you can really do, right?
No, that's a bit
So
insane.
yes, so even if you make money even if you make money essentially on reselling the flow or charging the takers, which is basically
Hmm.
the same thing, right? One, I think in the long run, your order books will be a bit less competitive, right? Because
Hmm.
makers would need to have a way to make money, and the overall execution cost for the traders would be comparable as with paying a direct taker fee, right?
Hmm.
Just because the economics for the market makers would essentially need to remain more or less the same, right? Otherwise, they would not. Otherwise, they wouldn't join. So we believe that purely from the taker side, essentially the overall execution cost remains more or less the same, right?
Hmm.
While for the exchange, it shrinks the opportunities, right, in terms of building a sustainable business model and building a
Yeah.
sustainable token in the long run, right? And obviously, right, like you can succeed with the zero fees approach,
Hmm.
right? Um, but effectively, we think that with the sustainable revenue model, which is super transparent, clear, and understandable, right, by all the stakeholders in the ecosystem, in the longer run, you can achieve a much, let's say, healthier business,
Hmm.
right, as well as the healthier token economics.
Yeah. I agree. I think that is also probably the better approach. I mean, it will probably like play out in the long run. We don't really know what will happen, but it just seems a bit
Hmm.
more sustainable to me as well. I'm curious. Do you personally like trade yourself? Have you ever really traded actively, or are you just more of a
It,
builder?
yeah, look, like I trade a bit, right, and I traded more in the past,
Hmm.
just because I had more time, right? But I would say I'm still more of the builder, right? Like if I see an
Hmm.
opportunity and if I have time, I do take it, right? But like this is not something I'm actively looking for, right?
Yeah.
As just to add on the previous topic of the business models, right?
Yeah.
I guess I guess there will be a lot of different opinions in the space about this, right? And we
Yeah.
actually are yet to see which business model will succeed, right? But I
Mm-hmm.
think as the builder, you just need to take a bet on something, right? And
Mm-hmm.
essentially continue pushing that, right? We have a rationale on why we believe our approach is better,
Yeah.
right? Others will have counter arguments to that, and that's totally fine. In the end,
Mm-hmm.
right, the market is sufficiently big and diverse for multiple different business models to succeed.
Mm-hmm. Believe in something, as they say.
Yes, yes.
Makes a lot of sense here. Um, what have been, apart from like the last like liquidation cascade and the bug that happened there, what have been like the biggest challenges along the way while you were building the product? Like maybe not even apart as far as like bugs or anything, or like breaking stuff, or just maybe just also acquiring users or liquidity or anything like that. What would you say? What's like the most difficult part so far?
Yes. I would say that the most difficult part is probably hiring the team, right?
Mm-hmm.
Because in the end, if you have the right people and the right team, you can build almost anything in this world, right? So it
Yeah.
always boils
Yeah.
down to people, right? And hiring is always the hardest part, right?
Mm-hmm.
For me, I actually personally realized the benefit that I have only after I left Revolut, right? But
Mm-hmm.
essentially, that benefit is that you worked with tons of people and you essentially have access to engineers, designers, product owners, operations managers, whomever,
Mm-hmm.
right? Just because you have access to the people with whom you worked in the past, right? And I guess
Yeah.
that's one of the biggest benefits of essentially me leading the Revolut crypto operations in the past is just because I have access to those people and I also saw how hiring processes work, right?
Mm-hmm.
In big companies, how do they select people, how they hire, etc., etc. And I would say that it was one of the advantages which we had early on is because we had access to people we could hire effectively,
Mm-hmm.
right? That's one. The second thing, like bootstrapping liquidity growth for users, is obviously super complex as well. And
Yeah. Yeah.
those things are interdependent, right? You need liquidity to bring users, you need users and the taker flow for the liquidity to come, right?
Mm-hmm.
And basically, the approach that we've chosen, we still follow, is that we're just trying to grow both organically simultaneously. And I would say it
Mm-hmm.
works, right? So both the usage of the exchange as well as the liquidity on the exchange has improved significantly, right, over, let's
Yeah.
say, last 3 4 months, right? And that's the only way, in my opinion, how you can solve it organically and sustainably, right? And
Mm-hmm.
we'll just continue pushing that. Like obviously there are a lot of nuances on how you can do it, right? How you can approach growth, liquidity, etc., right?
Mm-hmm.
And their own like complexities, decisions you need to take, etc., right? But hiring is still by far the biggest challenge.
What exactly are you looking for when you hire someone, or do you maybe have any advice to other people that you've learned while hiring people, like what to look out for? Maybe just like a
Look,
characteristic or something in general.
yes, I think that I sort of follow the Revolut's approach, where effectively like they only had two criteria to hire people, right? You need to
Mm-hmm.
be smart and you need to be hardworking. Like your past experience doesn't
Mm-hmm.
matter, right?
Yeah.
And we basically follow the same principle. I mean, of course, like if you're hiring engineers, right, they need to have past experience, right? But like in the
Yeah.
nutshell, the principle remains the same, right? You have to be smart, you have to be hardworking, you like need to be committed to the product you're to both the product and the team, right? You're
Mm-hmm.
working on. And for me, those criteria suffice, right? So I never really looked for people with past experience in crypto, right? Like
Mm-hmm.
we always prioritize smart and hardworking people
That sounds like
because
good
essentially, if you're
advice to me. Yeah.
yeah, like if you're smart and if you're hardworking, like effectively you can understand almost everything, right?
Mm-hmm. Yeah, that's
And you
true.
can gather the experience you need.
That's very true. Um, I think my last question for now is, well, you look at Extended right now, like currently in the state it is. What would you say is like the biggest weakness or like the biggest area of improvement that you're focusing on right now, apart from like the things that you're building for the roadmap for the future? Is there anything, any area where you would say like this is something that we're maybe not as good at right now, but we're still like trying to
I
increase
mean,
our
obviously,
performance in that area?
given that we went down during the last crash, right? So the stability is definitely one of the things which has to be essentially fully solved, right? So
Yeah,
that
yeah.
regardless of the market events, the exchange always remains stable and available to the users, right?
Mm-hmm.
Obviously, we're trying to do our best to solve that, right? And essentially to have, let's say, 100% uptime aside from the scheduled maintenance, right? So I would
Mm-hmm.
say that's the biggest other priority.
Yeah, I think that's also probably like one of the most important things in general, like just exchange uptime. I think in many, I'm actually, since I haven't looked too much into what happened last week, the only thing I really saw is I think Lighter went down for a couple of hours, and
Mhm.
I'm not exactly sure. I've heard like they said something like, yeah, they didn't have enough hardware or whatever, so it like went down, which is kind of a really not that great thing to hear as a user, because even, I mean, for whatever reason, but you don't want the exchange to go down when you need it the most. Like that is just very
100%,
important for you to
100%.
happen. To
Yes,
It's incredibly frustrating. You're going to lose money and stuff, and you just need that to happen. So I think that's really a good thing to focus on.
totally agree. Totally agree.
Is there I think, I guess that's like it from me, from the questions that I wanted to ask, the topics that I wanted to talk about. Is there anything else that you would like to say at the end, that you would like to announce, to shill, to publicize, or to tell people, to give them some wisdom or anything like that?
I think the questions you've asked were really deep and really well thought through, right?
Thank
So
you.
thanks a lot for for all the questions. I really enjoyed the conversation, right?
Yeah, me too.
Yeah, I mean, like there is nothing super specific that I want to add to that. Basically, I think we've covered all the most important topics, right? So
Hmm.
everything's good from my side, at least for now.
Great. I'm glad to hear that. I thank you very much for coming on. I also think this was a very good discussion. This was, I guess, a bit more technical than the usual stuff, so I hope people still tune in and like listen to it. But I think it was definitely very interesting, and I learned a lot about the exchange. And I hope I can like do also more technical stuff in the future, even though I'm also not like the most technical person myself. So I'm very happy that you like the quality of my questions. And yeah, I guess just thank you very much for coming on. Thank you for your time, and
Thank you a lot, and
goodbye.
thanks a lot for inviting me. Yes.
Of course.
Bye, everyone.